So welcome everybody, welcome JT Empire fam. This is JAVIII.fx from JT Empire. Welcome to your market tools class. We're on trading view right now. In this class, we're going to talk about the different type of market tools that I pretty much use and the ones that you will need, right? So of course you are already exposed to trading view and you know about favorites where you can add things to this bar right here. So we're going to look at the ones that are right here and how to actually use them. First one right here will have a horizontal array. I use this when I'm marking off certain potential areas for my take profit, also stop loss, or when I'm even setting up a break even. You can use this for multiple reasons. You can even drive first as a support and resistance. I don't generally use it for that, right? But what you can do is that you can edit it by double tapping it, and you can then type stuff, like certain things that you want to be on that line, certain things that you need to remember. So it will be presented down here. You can also change where you want it to be aligned. You can put it at the bottom, you can put it at the top, the middle, the center, you can put it at the left or the right? So you can make the thing a bit more uniform. You can also save it as a template down here, and you will call it a name. I have order block 1 hour, order block equilibrium, etc., because that's what I use the horizontal array for, and also areas where I want to buy or I want to sell. So these are my templates, right? Next one we're looking at is the arrow. So whenever you have a bias on the chart and you want to you know show your prediction, like you want to share it in the group, etc., you use the arrow on the chart to say, all right, I'm expecting the market to go up from a level that is right here, and after going up you expect that it will probably sell down, or something of the sort, where you could actually say, all right, it's going here, or there, etc. So we use the arrow to show our prediction of the market. That's it, nothing really too technical. You can also edit this and say, to put some sort of indication on the line right there, and it will pop up on that, and it will pop up above. You can edit it as well, just like the horizontal array, to say you want at the top or the bottom, etc. We have the rectangle now. I generally use the rectangle. This is for my support, my resistance. You can edit this again, utilizing words, whether you're marking off the support, resistance, 4 hour support, 4 hour resistance, etc. Whatever it is, you can type it in right here and it will be there on the screen, on the box, right? You can save templates just like I do. Again, I have a lot of test templates, order block templates, etc., where you can save them. You can change the color of the inside and even the outside. The text will be, you change the text color, can change the style, you want background or not. You can do so many things. You just need to play around with it a bit to see it, right? You also have the trend line now. This is where you use this is what you use to draw your trends. You have one touch right here, one touch right here. You have another right here. Draw a trend line like that. Draw a trend line like this. You can do so many different things with this. You can draw a down trend line like this coming down, etc. The vertical line now, this is what I would use to mark off the days of the week. If you notice on the charts at I send, I will mark off, I will edit this and say Monday, typing in the text box Monday right here, Tuesday, etc., Wednesday, Thursday, Friday. I mark these off and you see these as my templates. You can use the Fibonacci retracement tool now, where I'm going to show you how to use that. You've been exposed to that in the basic class. Let me show you how to use that tool. So when the market is in an uptrend, you identify the low of the market, right? And then you identify the high before the market makes the retracement. So this is the low and this is the high. And when the market comes back, you are awaiting the market to reject one of the levels, mainly between the 50 and the 61.8 area. This is where you look for confirmations to get an entry. Another area would be right at the 88% level. So you can see right here the market rejects between the 50 and the 61.8, and your extension levels are where you get the TP. You have take profit right here at the 0 line. You have take profit 2 right here at negative 27, I have a take profit 3 right here at the 61.8. I find these very, very effective. The market gravitates to these areas. So after you get to entry here, these are the levels that you are going to target. In the event that you want to place a stop loss with this, your stop loss should be below the 88% level. In the event that it breaks this line, it will not break the 88. Let's quickly look at the sell side with the Fibonacci. We have the high. You identify the high of the market, which is right up here, and then you swing the market to where the market makes the low. Now what you're waiting on is when the market made the impulse coming down, you're waiting on the market to come back to between the 50 and the 61.8 level. You look for confirmations, then you sell it. So TP1 would be the 0% line, TP2 negative 27, and TP3 61.8. So these are your three targets. It hit TP1. Next thing would be the three drive pattern. This I don't really use this, but you can identify a three drive pattern. It's in the course document. You will see with the market do something like this. All you have to do is just tap it on the screen. Market made three drives upwards and then you make one impulse coming down. Or you could see where the market made three drives coming down, one, two, and then three coming down. It will be like in a channel or something, and then you make an impulse going up. Right? You have the inverted head and shoulder, and you have the head and shoulder. So right here we could see that the market creates, is selling, creates a left shoulder, comes up, creates a head, comes up, then it creates a right shoulder, right? So I identify the inverted head and shoulder. Now let's look for one. Let's look for head and shoulder formation. Oh, there's another inverted head and shoulder right here, a little bit clearer than the first one that we just looked at. The left shoulder, the head, then it's the right shoulder, and then you have the market coming up with the impulse. So let's look at this is another inverted head and shoulder again. Quickly, left shoulder, head, right shoulder, and then you have the impulse coming up. Let's look at the head and shoulder now. You have the left shoulder, you have the head, then you have the right shoulder over here. You have the cipher pattern. I don't really use that. You have the XABCD pattern. I don't really use that either, but I can show you how it looks. Alright, this will be like harmony pattern, bat, crab, etc. All these things, right? Or you can join from the other side. This is like a W. This is a bearish pattern. All you're thinking in your head is that it will sell, right? And then you have the other one, where the market is something like this now. The other one where the market do this. And then you're expecting like a buy or something out of this. You'll find Fibonacci levels on these as well. So you just have to look at them. Right? This would be 61.4% retracement from this impulse coming down. Right? This retracement, or this is more like a correction, is 86.7% of this impulse coming up. So this 88%, correction. Right? This impulse coming down, coming back all the way up here, this is like takes out all the cells coming down and creates a buy. This is like 139.2% coming up. So that's it. You have Elliott waves and you have triangular wave, Elliott impulsive wave. These are things that they are good for beginners. You have this, as I said, 5 point pattern, 1, 2, and they have 3, 4. The 4 is usually bigger. The second wave, as I said, is usually bigger than the first one. And then you create the last 5 points, and then it comes down to make the overall third wave, right? So it we uptrend. Let's do it for the downtrend. Which one? Right? See for the downtrend. You have something like this. No, the concept of the Elliott wave is just that when it makes two waves like this, it's going to make the third wave. You're expecting a switch up trend. So once the market creates that fifth point, you expect a reversal because this is selling too long. The horizontal line, I don't use that. See, you don't really have to, but if you choose, you can. The ellipse, I usually use that to identify like imbalances. You learn more about that in the course. The price range tool just show you from one price to another, right? And in counting pips class, you will hear more about how to count the pips. But this is just you click the price range tool, click one point where you want to measure, and you click the next point and show you how many pips. This is 229.9 pips from here to here, and you can do it in the opposite side. From here to here shows you 233.5 pips from the top price, up here to down here. That's all. This is the double combo wave. You don't really need to use that either. You definitely need to use these two. The last one is the text tool. If you like to put text and stuff on a chart, then you can, and it's fine. And I highly recommend putting notations on the chart so you can remember what you are seeing at the time. But these two right here, your long position and your short position, you'll definitely be using these when you're doing the trade setups. This is your short position whenever you're selling. You would put your entry. This is to help you find a price where you want to enter at. So if this is where you want to enter the market at, you put a stop loss, find some area to put your stop loss and some area to place your take profit. This is what you will place on the chart, on the trading view, that will enter you in the trade if you are signed into your broker on trading view, or if not, then if not the exact price you entered on your MT4, then this is the price that you put in for your stop loss and the price you put in for your take profit. That's it. The long position now is of course the opposite of the short position. This is where we want to enter. I find some support you buy right there. You place a stop loss somewhere. You put a stop loss somewhere and you target an area, right? This is so you can track your position. Simple. But you definitely need these. With that said, guys, there isn't anything else that I need to show you as it relates to market tools. These are the tools that you will definitely be using. With that said, this is JAVII.fx. Peace.